Welcome back, and joining us now is energy expert Narendra Taneja. Mr. Taneja, hi, thank you so much for joining in. And while most of the commodities really seem to be making all-time highs and record highs, what hasn't done in sense of a segment has been energy. And we're looking at surplus one, and second, the demand concerns as well. How would you look back and look at 2025? And would you say that much of what we are looking at in sense of fundamentals is what we will carry into 2026?
Well, looks like if you look at the last couple of months and the way, for instance, crude oil has trended globally, it appears that, at least in the first quarter of 2026, we are going to be witnessing more or less the same kind of landscape and scenario. Unless, of course, there is some major geopolitical trigger, let's say, in Venezuela or over Venezuela, whereas, the U.S. is very active, and Venezuela, when it comes to oil, is a superpower. They have the largest, oil reserves in the world, but there are some political reasons. So unless there is a kind of geopolitical trigger, I really don't see. When you look at the demand is mainly led by India and a couple of other countries and regions, including the Middle East. But that's not enough really to drive the prices up. As you know, that President Trump is very keen to keep the prices low as possible, but not below 60, because 60 they need in order to keep the shale industry in good shape, because it's less than 60, then the shale can get into trouble that he doesn't want. But $60, the U.S. seems to be very comfortable, and that's what they want. India is extremely comfortable. Russia is reasonably okay. And most other countries are not complaining, except maybe Abu Dhabi and Iraq and a few others. But overall landscape looks like the first 3 months are going to be what we have witnessed the last couple of months, provided, of course, there is no geopolitical earthquake.
Mr. Taneja, there are various reports also suggesting that there is a possibility that we could be looking at crude oil prices slipping below 60. In an event like that, do you see OPEC Plus doing a turnaround? And what is a threshold, or what is a level that you would see OPEC Plus in that sense defending?
Well, good question. I mean, my sense is that, if you really go by demand and supply fundamentals and keep the geopolitics out and take out the geopolitical premium, oil today should not be more than $58 per barrel. If you go strictly by demand fundamentals and the fact that the market is very well supplied and there is plenty of oil on the horizon, I mean, the new discoveries and the new production fields. So given that kind of situation, but at the same time, OPEC at this stage doesn't really have much to do. OPEC without Russian support cannot really go too far. And at the same time, there is huge pressure on Saudi Arabia to keep prices low in the region of $60 per barrel. And OPEC is essentially Saudi Arabia. So unless Saudi Arabia and Russia, they come together, they come on the same page. And it appears that, right now they want geopolitical stability. Even Russia seems to be keen for some kind of solution over Ukraine. And if that happens, then I think we are going to see oil maybe about $55 to $58 per barrel if there is some kind of breakthrough over Ukraine, which does look like unlikely to.
$58 to $58 a barrel, only if there is a peace conversation that we see happen between Russia and Ukraine. Now, Mr. Taneja, the other thing really is about natural gas. And when you look at that chart on most of those commodities in 2025, natural gas is the only positive. We are looking at seasonal inventories below 5-year average, and the expectation that the demand is going to be much better going forward. We'll try and get Mr. Taneja back. But when you look at the overall chart, while we have seen the crude varieties, all of that on a declining side, it also is about heating oil, gasoline, coal prices, TTF gas prices. All of that has been on a decline. But Mr. Taneja, natural gas is the only one that seems to be trading in the positive. Would you see positive cues continuing?
As far as the natural gas is concerned, I think the demand is going to see only one direction, that's up. Two reasons for that. Number one is demand for gas is growing because majority of countries are following this mantra of green energy, and as you know, natural gas is considered green energy. Strictly speaking, it's not, but that's a different debate. But it's considered a green energy. Second reason is that unlike oil, which is a kind of global market, natural gas is a fragmented market in the sense Europe has its own universe. Asia has its own universe, America has its own universe, but at the same time, thanks to LNG, where you can ship gas from one part of the world to another, you see, it is also now partially become a kind of global commodity. So that is the main reason. And there are countries like India, Korea, Japan, China, and they are actually, showing more appetite for natural gas. So which is a good sign, and therefore you find that Arctic route is opening up, and there are many other countries which are, trying to export gas to the energy deficit countries, gas deficit countries like India. So, and I think in a couple of years you're going to see gas acquiring a completely different status, and is going to be more in demand. As far as the prices are concerned, since there is plenty of gas available, the prices are going to see up and down just like we see in oil. But but gas is kind of more long-term agreements driven, especially when it comes to pipeline, like between Russia and China, certain countries between, in the Middle East to Europe and so on and so forth. It's a completely different universe when it comes to gas. So we cannot compare it with oil. But gas, we are going to see kind of, more demand. We are also going to see gas emerging kind of quite sovereign in terms of his own way of looking at the world, and also in terms of his regulation, prices, geopolitics, and so on.
Okay, Mr. Taneja, thank you so much for joining us this afternoon. And Manisha, thank you so much for joining in and taking us through that conversation. Will be important to see in terms of the changes that come in from the side of gas as well, and how it moves going forward in terms of prices. But thanks so much for that conversation. On that note, we're going to slip into a very short break. Up next, Sudarshan will focus on the key trends in the two-wheeler EV space in 2025. Stay tuned in.